Wonderful good day, ladies and gentlemen. My name is Jochen Steiger. I'm the Chief Editor of Commodity TV, and we work here today in partnership with Dukascopy TV. And my guest here is Dr. Alistair Cowden, a well-known and well-respected copper expert out of Australia, but also, even more important, he's Managing Director of Altona Mining. And we want to talk about your terrific company. Alistair, very warm welcome.
Thank you for having me today, Jochen. Pleasure to be here.
Thank you. Well, Altona Mining. You have a fantastic company, and we know each other for a long time. And I've been also in May in 2012 at your Finnish mine when it was opened, which you sold already. And yeah, now you're working in Australia with your, I call it new project, yeah, which is in the development phase. And yeah, please give us a short overview about the company.
Company is a very simple company. It was formed in 2010 by merging two companies. One had the asset in Finland that you mentioned, copper gold asset. The other had the copper gold asset in Australia. And in that time, since 2010, we took the copper gold asset in Finland, we had it financed, we studied it, we built it, we got it operating, we started to make money, we paid back our debt. And last year we were approached by Boliden, Swedish-based metal miner, who wanted to buy the mine. We sold the mine to them for 116 million Australian dollars. Our market capitalization at the time was only 80, so it's a very good deal. And we then decided to give money back to shareholders, so we gave 80 million back to shareholders. So the company's been one of the best performing in Australia in the copper sector because of that return to shareholders. But interestingly, in parallel to that, the much bigger project in Queensland and Australia,
which we see here already.
2.5 hours flight from Brisbane. It's a big country. We took that through the stages of doing a feasibility study, getting the permitting completed. It means Aboriginal native title permissions, environmental permissions, and then finally a granted mining lease, and got it to the stage where we want to build the mine. And essentially what we decided to do, I think you can get a feeling for what kind of company we are, shareholder focused from giving money back to shareholders. We didn't want to finance a $300 million mine all by ourselves.
That would be very dilutive. Right?
Very dilutive for shareholders, a lot of financing risk. Many of the companies in the mining industry that have failed because of aggressive debt structures. A lot of hedging takes out the upside in the copper price. So what we've been doing for some time is looking for a deal, maybe a partnership, perhaps merging with a stronger company with a bigger balance sheet, or perhaps even selling the asset.
Okay. Let's have a short look, because I think it's also interesting for our viewers. What does it look like, you know? Because it's easy to say, oh, we build a mine and we produce it. Afterwards, we produce copper and gold. But can you maybe explain a little bit how all those little things work together?
Mines are very simple. What they're about is taking rocks, smashing them up into little bits, and ending up with small enough pieces where you can separate the bits that are worth money from the bits that are not worth money. But it starts as a big hole in the ground. This is an open pit mine, a large hole in the ground that gets larger and larger and larger. And we're looking here at a very large scale mine with big equipment, 150-ton trucks, big shovels. They'll move 7 million tons of ore, rock. That goes per year, and probably for every ton of ore we move, we'll move about 1.5 tons of waste rock. So the mine will move around 14, 15, 16 million tons of rock a year. That's a lot of stuff to drill, blast, and move. Half goes to a big waste dump, which ultimately is rehabilitated and made into an artificial hill. The other half goes to a processing plant. So you can see in this diagram here, the big blob of the pit, that will be 250 meters deep, maybe 1.6 kilometers long, so big hole. Eventually when it's finished, it'll probably fill up with water to
a nice lake.
Nice lake, which are not many of in the bush in Australia.
That's right.
So big hole in the ground, and here you can see a picture of how we find these things. This is a diamond drill rig, takes drill core and a tube of rock down to, well, we've drilled maybe many hundreds of meters deep, and that allows you to predict the nature of the ore body that you hope to mine, and it's the foundation of your engineering studies.
And as we see here, it really looks like out of the boonies, yeah. But we saw on the first map, we saw that it's Mount Isa region. Maybe can you comment on the infrastructure a bit?
Well, where we are, although Australia's a big country, there's a lot of nothing out there. It can be quite pretty. Yeah? This is after the wet season, the image you can see here, so it's very green. But Mount Isa is a 90-year-old mining centre. There's been underground mines, open pit mines there for a long time, zinc smelter, copper smelter. The mine's now operated by Glencore, and there are other very large mines in the area. The largest silver mine in the world, some very large copper mines. All the infrastructure and skill you need are there, power, road, water, but importantly mining skills, mining culture.
Mm-hmm. So everything is there, everything is in place.
Everything's in need, but of course you do have to spend money to get it right to site.
That's right, and I believe also like in a competitive environment, meaning that water and power is not costing you, tons of money. Let's put it that way. That you have competitive prices for water and power, for example, and also the wages are coming down, right?
Australia went through a mining boom, an incredible mining boom. The iron ore industry in Australia and the coal industry in Australia, almost equivalent to a Middle Eastern oil producer in terms of volumes of money and exports. That drove wages and contract costs way through the roof. The boom is over. Costs are coming down. So yes, some things are getting cheaper, but some things still cost the same. But it should be a very good time to build a mine if you can get it financed.
Mm-hmm. And as we see here, that's really in the boonies. That's where the proposed mine is, right? But it's, as said, easy to access. Right.
It is. We're only just over 5 kilometres from a main road. There's a big mine development going in just 9 kilometres from us. It'll be $1 billion development, hopefully approved in the next little while. The infrastructure is such that if you're standing out there, middle of the bush, you can flip open your iPad and download movies faster than you can in the city because of the infrastructure put in for that mine. Wow. So it's although it's the middle of nowhere, you're not that far from civilization. You can never escape your emails,
which is a nightmare. From time to time, we have. So we can say that's like as we say with the cost structure, all-in cost. So that's an all-in area.
Yeah, that's a good way to put it. Yeah.
Fantastic. Maybe one little word shortly to the financing. I know you are on a company transaction, so that means hopefully within the next whatever days, weeks, something could happen.
Well, as we speak, the company is in a trading halt. Trading in the shares is suspended. That is because we're pending a transaction, and it's extremely difficult to talk about that in public. But what we have said is that it's an asset level transaction, and that we'd be selling down equity in the project to pay for the capital, our share of the capital cost of the the project. However, I would point out that until a deal is done and announced, it's not complete, but we're very confident that we may have found a financing solution, hopefully one that delivers, makes very clear to the market the value of an asset like this, because the value in our share price is not great for this asset. But if it is financed and will be developed, it's worth an awful lot of money, and it will be a very long mine life as well, I believe. The exploration upside of this project is very good. So it's a really interesting, exciting time for the company.
Super. Last word on that. If let's assume all will be executed, how fast can you be in production? Because everything is permitted, everything is done, you are shovel ready to take off, right?
You're never quite shovel ready in that there's a whole bunch of engineering and design that you want to do before you go again. We made a discovery last year, which is kind of it was right where some of the infrastructure was supposed to go. So we have to adjust our plans, re-engineer and adjust some of the permits. Very straightforward, but it takes time. But I think the earliest, if all goes well, you could be in production is probably early 2018.
Great.
And that's when the revenues would start to flow.
No, but that's really foreseeable, I would say.
Very normal in mining. It can take a lot longer than that.
We don't hope so. Alistair, thank you very much. We keep fingers crossed, and all the best, and hopefully you have a nicer announcement in the next little while.
It's been a pleasure talking to you.
Great, thank you very much. Yeah, ladies and gentlemen, that was Dr. Alistair Cowden, the Managing Director of Altona Mining. Well, you heard it, the company is in a capital transaction. Of course, they are not allowed to talk about, but hopefully they have the money then together to start to build the mine, because it is all permitted, it's all there. And funny enough, where they wanted to put the waste stamp, and they found again ore, and they found that much ore that maybe if once the mine is in production, they can do at least 1, maybe 2, maybe 3 years in addition of production with that. So that's funny when you want to put the waste, you find ore and make money out of the waste. So I think it's a fantastic story. Check it out. That was Commodity TV, Jochen Steiger in partnership with Dukascopy TV. Thank you very much for watching us. Bye-bye.